Thank you so much for everyone taking the time to learn more about Haventree Bank. My name is Faisal Jamil. I'm your BDM. So I see one person doesn't have sound. Hopefully everyone else can hear us. Click on the chevron next to the microphone on the bottom left of your screen. Okay, perfect. Thank you very much. So again, my name is Faisal. A little bit about myself. I've been in the mortgage industry. I stopped counting after the 15th year. So I've worked in various capacities. Prior to joining Haventree Bank, I was actually selling software across North America for private lenders and also for MICs. So it was a great opportunity, really enjoyed what I did, but I need to change. I actually got into the industry. I started brokering. So very familiar with all of the challenges agents are dealing with on a day-to-day basis. So if I ever say to you, I get it, I'm not just saying that to keep you happy. I truly do understand how much work is involved in getting that borrower to say, please proceed with my mortgage application. It's a lot of work, so I definitely appreciate it. If you guys have any questions along the way, please feel free to ask. We're a nice, intimate little group here, and I will set up my screen share right now. So you should now be able to see my Haventree Bank screen. And so there's a lot of information I will be sharing with you today. And as you guys are dealing with your borrowers and as you're dealing with your lenders, you have a lot of big decisions that you're making because your borrowers will be asking you questions. Who is Haventree Bank, et cetera? What are they? But also for you as agents, you're making a lot of decisions because you want to make sure your borrowers are dealing with lenders that offer favorable terms and conditions. And also when it comes to underwriting. So it's important for you guys to know as much information about us. The basics with Haventree Bank is that we're GIC driven. So we take deposits in and we lend out the money. Why I mention this information is because we are lending out our own money and we're not relying on big institutional lenders, we get to call the shots. We make all the big decisions in-house. That data, the application does not leave Haventree Bank to be escalated outside of our staff. So what that means for you is a much quicker turnaround time, which is critical in today's day and age. So that's the basics. We are an empathetic lender. The story absolutely matters, and I'll circle back on that. Now, when it comes to common challenges you're all facing right now in the industry, hands down, the biggest challenge right now are the debt servicing ratios. Even in my space, it gets pretty difficult to always make a file fit. So what do? We allow GDS, TDS to go up to 50-50 on the ratios, and that's up to 80%. Our definition of a non-conforming loan includes a loan to value with a maximum 65% LTV, but now we can further extend the ratios up to 60-60. So we have wiggle room on that. Other common challenges is you're calling up your lender. Sometimes your first question is, what's the minimum credit score? Well, we don't have one. For any of your borrowers that have verifiable income, employed, BFS, verified through T1s, we do not have a minimum credit score. So we have lots of opportunities to work with your borrowers, which a lot of borrowers right now are dealing with bruised credit because of high utilization. There are 3 instances where we're looking for a minimum credit score. That's for BFS, going with our bank statements, 550, or our condo rentals. We are looking for a minimum of 550 on the beacon, and for our seconds, 640. Maximum loan amount is $2 million. Now, across the board, 80% on owner-occupied and rentals. When it comes to condo rentals, we do scale back to 75%. Now, for new construction, what do we do differently? Well, common questions, do we lend on the appraised value? Yes, we do. The criteria is that the offer to build must be completed more than 12 months ago. So how do you take advantage on the ability to lend on the appraised value? Here's a scenario that came my way not too long ago. Borrower ratios were 45-55 on a new construction. So I asked the agent, where's this debt? Why have
Sorry to interrupt again. I think it's again the same for me.
Okay, so if it's the same for you, same for others. So unfortunately, I only have the two different settings here. You know what I could do is I could always call in from my cell phone. If you guys want to give me a few minutes, I can call in from my cell phone.
I think we should be okay.
Okay. Is it better now? I didn't do anything.
No, it's still the same. It's still echoing.
So let me try changing one more time.
It's good now.
It's good now?
Just when, yeah,
Okay.
it's
If
when
I
you said this.
if I need to call in on my cell phone, I'll do that. So let me know.
Yeah. Okay, cool. Yeah.
So back to that file scenario, GDS TDS was 4555, and the borrowers had financed their wedding on debt. So because it was new construction, we rolled some of that debt into the mortgage. So if we're going up to 80%, the mortgage amount cannot exceed the purchase price. That's 100% financing. Your borrowers have their land transfer tax covered, they have their developer fees covered, all the hookup and setup fees. Whatever's left over, they're essentially their deposit money is returned to them. Now they can take that deposit money, contact referral partners as realtors, and possibly invest into another property. So this is a tremendous opportunity. So please keep this in mind that for any of your borrowers, new build, minimum 12 months, including. Okay, this is not exclusive for owner occupied. This also applies for rental properties. More favorable terms and conditions. What do we do differently? So again, common challenges, cash flow. So we do allow a 35-year amortization. You can add 10 bips to the rate. Always be mindful when you're dealing with an alternative lender, you're not selling the rate. You'll never win that game. You'll never win the rate game with an alternative lender. You have to sell the mortgage payment. So we're selling cash flow, lifestyle for rental properties. How is this property going to cash flow positively or negatively? All of our files are contracted are qualified at the contract rate plus 2. 20% P&I standard, very nice to have. We do withhold 3 months worth of property taxes on funding and collect monthly. There are exceptions to the rule. But this is huge, guys, right here. Common challenges in the industry with alternative lenders says that if you want to exit out of that other mortgage, the property must be sold. If it's not sold, you cannot exit out. So with us, your borrowers and you as mortgage agents are always in control of the direction of the mortgage. At any time, you can exit out. It's 3 months interest or IRD. There is a fantastic online calculator available on our website. A few common challenges in the industry around the GTA, minimum square footage requirements on condos. So we do have a minimum square footage. It's 500 square feet. Now, what do we do differently? We could look at the balcony as living space. Add the balcony, it's 50 square feet. The condo is 450 square feet. There is the 500 square feet. Now, we are not a fan of studio apartments or rooms or bedrooms that have a sliding door. Outside of GTA, minimum 650 square feet. For homes, 800 square feet. Here's a story from one of my colleagues. There was a small townhome out in Durham region. Again, the property did not meet the minimum square footage requirements. So what do? We have two options. Well, we sent the appraiser back, and it turns out the patio in the backyard was large enough. We added that as living area, and we achieved the minimum 800 square feet needed. If that doesn't work, we will still consider that file as non-conforming up to 65%. So we have solutions in place for you. Appraisals. So unfortunately in this industry, we know we have to deal with appraisals, but the challenge becomes your borrower needs a quick close. So what's happened? They wanted to go to their bank at the last minute. Their bank says no. How do we best accommodate this type of scenario? We have an AVM model. So the AVM is essentially either the file meets the AVM or it doesn't. If it fits, well, we've just saved a ton of time and we can help manage that quick close of yours. Now, just talk about quick closes for a second. We're not fans of them. We're going to ask you a lot of questions. Why isn't this in place? Things like that. Within reason, we can consider doing a file within 2 to 3 weeks. So the AVM fee is $350. If the file doesn't AVM, there's absolutely no charge. You have to request it in your lender submission notes. So here's a small tip on how to make sure that file does AVM. What's important is the property taxes. So please make sure you enter in the property tax information correctly, because when we're searching, we're looking for similar properties that have property taxes with that dollar amount. If you put in $7,000, but the taxes are $4,000, we're not going to find anything. So please be mindful of that. Outside of, and there's other criteria that needs to be met. Outside of that, we have our approved appraisers list. It's available on our website. And we have all the flexible options you need if you prefer working with NAS, RPS, Solidify, or Value Connect. Okay, so there's a lot of information here. Don't get lost in it. I'm going to make this very, very simple. If the income is Canadian and it's verifiable, we will consider it. Again, what do we do differently? What are some challenges in the industry? If your borrower happens to be a realtor, and keep this in mind as a talking point to your realtors as referral partners, but using a realtor as an example, this applies to mortgage agents. Anyone that is 100% commission based will take 100% of that commission income. Show me the T4A, and we do not require any deductions. Done. It's the easiest way to finance someone who's 100% commission based. When it comes to government income, there is some income that is non-taxable. Just show me that's non-taxable. We can consider gross ups of 25 to 35%. Okay, so that will help qualify. Other common challenges in the industry. When your borrower is going through a spousal separation, with a normal lender, usually the A lenders, we have the income and we have to add that alimony as a liability. With us, we will deduct the alimony from the income. As an example, $100,000 income, the income now for the purpose of the application is 88 grand. For the borrower that is paying this, any spousal support or child support, we only have to service 50% of that payment as a liability. Again, we're very, very favorable and flexible when it comes to this. Of course, to the borrower that is receiving the alimony or child support, we will accept 100% of that. Other thing that's very important on this slide is the maternity income. We'll take 100% of it as long as we know the return to work date is within 12 months. Easy. Okay. Business for self. We have two different approaches. Most of the files we receive at Haventree Bank are geared towards your BFS borrower that is, we're qualifying this based upon the bank statements. So this is option number one. We need a minimum of 12 bank statements. You look at the deposits minus the expenses, it gives us the net income. We will ask your borrowers to complete a Know Your Borrower form. They will complete all of what they think are their ongoing business expenses. Common questions and challenges. So common questions. What are the expenses that I need? Well, as you know, every business is different. We have to make it relevant to that specific business. An IT consultant has much different expenses than someone who's an owner operator of a truck driving. Now, here's another common challenge. Your borrower is BFS for less than 2 years. Can we accommodate? Yes, we can. It needs to make sense. Again, we need a minimum of 12 months worth of bank statements, but we're looking for someone who has tenure in the same industry. Common scenario, IT consultant. They've been an employee for the past number of years, and now, yes.
It's again echoing, I guess. Sorry
Okay.
about that.
No, I appreciate you letting me know. Would it be better if I just call in?
Yeah, that's okay.
Let me just take 2 seconds and call in. I'm going to just put everything on mute.
Sure.
So back to BFS. Deposits, expenses gives us the net income. Be mindful, I think I was talking about If your borrower has been self-employed for less than 2 years, we can absolutely consider. Again, let's make sense of that particular scenario. Now, if we're going with the 12-month bank approach, be mindful that in your lender submission notes, there is absolutely no need to mention the NOA or the T1. Okay, we're not going to ask you for that. Now, again, the minimum we need is 550 for the BFS 12-month bank statement approach. As I mentioned, we do not have a minimum credit score for verifiable income. So if we don't meet the minimum 550, let's talk about the T1 and doing some add backs to the declared income to see if we can consider that file. Again, we have options here for you. No minimum credit score for fully qualified income. Common challenges in the industry. Your borrower has been through bankruptcy. What do we need? What if they've been through double bankruptcy? Our criteria is very, very simple. The bankruptcy needs to be discharged for 1 day. That's it. So be mindful of that. Now, as debt continues to mount in Canada and spending is not out of control, but it's a challenge because the cost of living is so high right now, we'll possibly see more borrowers getting into consumer proposal or possibly a bankruptcy. The good news is that at Haventree Bank, if the consumer proposal is in good standing and it meets and it services within the debt servicing ratios, we could absolutely consider having a borrower with an active consumer proposal. Okay. Of course, it can be paid out from any proceeds of a refinance, or it can remain in place. So something to keep in mind. Other common questions and scenarios. What if your borrower has had past mortgage arrears or your borrower has had past foreclosures? Again, the story matters. Help the underwriter understand what was happening back then and how their situation has improved, so we know that this is not going to happen again. Was that mortgage arrears situational, or was it just based upon the character of the borrower? There's a big difference. So be mindful of that. Other common questions, my borrower is currently in arrears. Within 30 days, we can consider. 60 days might become a little bit questionable. We might not be able to help out. If the borrower is in legal proceedings, we're not going there. So help us understand what happened. We will gladly pay off CRA and property tax arrears. I'm dealing with a situation right now where we are paying off over $100,000 worth of CRA taxes. Okay, so we'll gladly help your borrowers. Now, as far as our seconds are concerned, a lot of people do not know we offer seconds. You want to think differently about our seconds because most people are inclined to think about a private interest-only second. You have to take it for 12 months. You have to pay a heavy original fee on the file, and then you have to pay very heavy renewal fees, and then you have to pay 3 months worth of interest to discharge the mortgage. Our seconds provide a fantastic solution for your borrowers. First and foremost, you can respect that existing first mortgage. That could be 1.75, 1.99%. The second reason our seconds have been so well received is that they're amortizing. So we can amortize our seconds up to 35 years. And then during this time frame, of course, we're improving your borrower's cash flow. We're improving their credit scores. And then at the same time, the biggest reason our seconds are so well received is because we can make sure the maturity date of our second lines up precisely to the maturity date of the existing first mortgage. So if you need something that you're funding today, March the 27th, and the existing first matures July the 27th of 2026, that's no problem. Everything will line up precisely, which gives you and your borrowers a very easy exit strategy. So things that we're looking for, again, minimum credit score of 640, maximum ratios are 45-45. Keep in mind, we're not stress testing the existing first mortgage, but we're only stress testing the new money. Our rates right now are about 10 to 11% for our seconds. There is a lender fee of 1%. It's easier for me to tell you who we do not go behind versus who we go behind. We do not go behind private lenders, reverse mortgages, or mix. So if the lender is institutional, we will absolutely consider them. Always be mindful of the combined loan to value. So for example, if there's a collateral charge, be mindful of the collateral charge in determining the total combined loan to value. All right, we're almost done. So as far as our rental programs are concerned, we do allow for rentals. For your office is case-by-case exception based. So please just email me. I'll work with you on the file to get an exception to get one of your files into us as a rental. Basics: if the subject rental property needs to be located in a city of approximately 100,000 people, again, it needs to make sense. As an example, we did a file out in Ingersoll. They don't have 100,000 people, but it was close enough to London, so we were able to consider. So for the subject property, it's a 90% added to income. For the non-subject, it's a 90% offset. Okay. Maximum TDS of 50%. Two common challenges in the industry. I get these questions all day long. Do you at Haventree Bank allow for properties to be placed into a holding company? The answer is yes. We absolutely allow it. Maximum 2 directors. Now, we allow for your borrowers to own up to 8 rentals and 1 principal residence, which gives us a total of 9 properties. But let me be clear about this. This is not the number of doors. A lot of lenders base their risk appetite on the number of doors. For us, it's the number of units. So for example, your borrower owns, 3 or 4 fourplexes. Well, 4 times 4 is 16. That's not 16 units, that's 4 properties. Okay, so we're very strong in that sense. So be mindful of that. I began the presentation by, having you think, letting you know, what do we do differently at Haventree Bank when you're deciding why would you want to work with us? So I understand there's a lot of new agents in the room today. A lot of lenders offer what's called the Encompass Home Warranty. What that allows your borrowers to do is have protection against any major components of the house that may fail. For us, we offer $10,000 per year in claims. The $50 fee per incident, parts, labor, emergency, overtime are covered. But what we do differently is that we offer this protection for the entire term. You have a 3-year mortgage with us, that's $10,000 per year in coverage, so it's $30,000. When your borrower receives the welcome kit from us, they will receive information on this. It actually forms part of the commitment. So when your borrower signs off on the commitment, they're accepting the Encompass Home Warranty. Again, no charge, complimentary. This costs us a lot of money every year. This is one of my favorite programs at Haventree Bank. What happens if your employed borrower loses their job? Well, there's actually a lot of things, as you know, that will happen. They're possibly taking on more debt. They're possibly going to bring their credit score down. And for sure, this will have an impact on your exit strategy to get this borrower back to an A lender. If your employed borrower has made at least 4 payments to us, they can enroll in the Next Job program. It's optional if they want. What the Next Job program does, it essentially provides them a dedicated employment coach every step of the way, everything from looking for a job, all of the training, workshops, key bits of information on how to successfully plan and prepare for your interview. So we're just as interested in getting them back to work, of course, as you are, because this option allows them to be cash flow positive. Well, why? Let me back it up a bit.
There is a fee, my apologies. There is a fee for this. It's $1,500. It's capitalized in the mortgage, but this is the best part. We'll defer up to 4 months worth of payments.
That's
So
the
while they're in this program, we're helping them to remain cash flow positive, and it helps to respect, the exit strategy. So this is huge.
Your voice is echoing again.
We have an online broker portal, very simple way to interact and engage directly with your underwriter.
Hello?
You get real-time updates as the file's been approved, committed, funded, etc. You get all those real-time updates. In terms of compensation, so across the board, guys, we do charge a 1% lender fee. There are some instances where we offer an open mortgage where it's a 2% lender fee, but you can assume for sure 1% lender fee across the board. This is the compensation. You're more than welcome to charge a broker fee. And then what happens is we do pay trailers. So as long as you're involved in the renewal process, reach out to your borrowers 150 days prior to the renewal. All of your lenders are reaching out 120 days prior. So make that a standard practice of yours. We will gladly give you compensation on that renewal. You have to be involved in the renewal process, specifically returning the signed renewal agreement to our renewal department. Some good to know bits of information. All this little bit helps out. We can blend and extend. Portability is available. Please return the signed commitment within 10 days. Even if we need to make changes after the fact, returning the signed commitment keeps the file open and active with us. So please be mindful of that.